If it's not entirely clear to you how prop firms are making money, then you might be hesitant to use one. So in this video, I'm going to clear up exactly how they work and their business model. Now, this can vary from firm to firm, and often you'll find the most reputable firms with the best customer base and the best recurring results are the ones that survive. We've all seen lots of prop firms that don't make it. You know, they go under and they just disappear, basically. So it's a good idea to use reputable ones and understand really how their model works, so you know what you're getting into. So I'm going to describe it in layman's terms in this video, and I'm going to do it by showing you a prop firm. Let's go ahead. So if we just take FDMO for example, and don't forget, if you want to learn how to pass these challenges and trade the prop fund successfully like our members do and myself, go underneath this video. We teach every day on Zoom for about 2 hours. So let's go ahead and get into it. So FTMO, probably the most reputable firm. How or what is their structure? So of course you have to pay, as many of you know, to take a challenge. You pay X amount, okay, 155 euros, so give you 10 grand should you pass their challenges in terms of step 1 and step 2. So step 1, you need to make $1,000. Step 2, you need to make $500. Okay, so the profit target halves. And then there's no profit target after. You just need to stick within their limits. Now, if you go up to 100 grand rather than 10 grand, you can see the price doesn't go up 10x. Okay, obviously they've priced it in that way on purpose. But when you get to 100 and 200, it does double. And that's just to get people in at a reasonable level. Now, we have to consider why they're charging this money. Why is there a fee to do this? Well, to run a prop firm, okay, you're going to need customer service, you're going to need to pay web fees, you're going to need to pay fees for the platform, okay, if they use MT4, MT5, as they're more reputable, lots of, MetaQuotes are often happy to do that. But to fund all of that, and the banking, admin, everything that isn't to do with trading specifically up front is covered by this. Because you have to remember 95% of people fail these challenges, and then like another 4% out of the 5 then go on to lose the money as a funded trader and not make much, or if anything, okay, because they're unsuccessful. So, the likelihood is most of the time they're going to get this money as a profit, and probably 19 out of 20 times someone is going to fail, and nearly always they're going to fail to get anywhere past actually being funded. So in the event they do somehow manage to pass the step 1 and step 2, they won't get past step 3. They'll lose the funding or the funded account. Now that's why the limits are as they are on step 1 and step 2. It's simply because they know these limits are such that it will get rid of people who can't trade. Now, having said that, the limits that they do have don't necessarily prove anything. I mean, anyone really can, by accident, if you like, make $1,000 without losing 500. You've got min trading days of 4 days, fine. You just take several trades on 3 days, and then someone might miraculously pass twice. It's not unlikely that would happen, but it doesn't happen, particularly a lot. It can happen, but it's not very frequent. And each individual, can get there. But I mean, like I said, it's better to trade this properly or use our new loophole to pass the challenges. But in any case, the point I'm making is because most people fail, they'll just keep getting paid the fees. No matter the size, they'll keep collecting this as profit. And the reason why is because they fund you. If you scroll all the way to the bottom, it'll probably say something about it, or at least in their terms and conditions. It will tell you they provide services of simulated trading, all right? And most prop firms will just give you virtual funds to trade with, okay? It's not real money particularly. And the reason why is because obviously if you keep, failing, they're not going to lose any actual money. They're just going to gain your funding fee, all right? And because it's very rare that anyone gets to this step, because most people just can't trade or can't make money trading, they don't have to worry about it. So a prop firm makes money, firstly, off the fees. Okay, that's the first part, but that's mainly to cover costs and make a bit of profit on the side. Then what you do have is folks who trade for a year, 2 years, 3 years, 5 years consistently. Now, you've got to remember, if you were a prop firm and you can see someone has made money for 5 years and their risk is very tight, what would you do with that? Okay, what would you do? Now, you have a profit split, okay, as an FTMO trader, and it'll say somewhere on here, how much that is for each amount and all sorts of stuff like that. You can see 80% of the profits they generate. Now, the thing is, what they'll do is once they see you're profitable and they know you're a profitable trader, they'll just copy the trades, or they've got the opportunity to copy them or sell the data off to other companies that then copy the trades themselves. There's all sorts they can do with a professional trader. It's not particularly that they care too much about this 80-20 part, because they could copy the whole thing twice if they wanted to. Or they could just give you 80% of the profit they make and then keep 20 for themselves, and they'll make money forever that way. So if someone fails, they'll get the fee. If someone passes, they'll make money out of their trading activity. The only time this goes wrong is when they have a small amount of very, very profitable traders, and then their marketing fails and they can't get any new traders in to fail. Okay, because there are many firms who just take the funding fee and just pay it off to the professional traders who are making money. Okay, so they're basically hedging themselves with people who are failing. People who fail pay the money into the professional traders, basically. So there are various forms to this. You've got firms that do that. You've got firms that copy your trading. You've got firms that sell your data. The model particularly for FTMO isn't entirely clear on what they particularly do. But behind the scenes, they have all those options. Okay, they've got various options to make themselves significant amounts of money. You don't really need to worry about that as someone who's doing this, but it does help to know what the structure is behind the scenes. Okay, so to be clear, they make money off the fees. Some firms make money copying your trading, and some firms simply pay the fees off to the traders who are making money. Okay, so it's like it's a weird cycle. But it operates well, and that's how it goes. But lots of firms aren't entirely clear about how they make money. Otherwise they would say. It's quite often that they don't say. But if you Google it, they'll tell you all over the place. How specifically they're making all their money. But like I said, they're not going to particularly tell you right here. But some firms will. Some firms will be upfront with it. Lux Capital, for example, and some firms just give you real money to trade with once you're clear. But a lot give you virtual all the way. So thanks for watching, guys. Hope that helps. Don't forget, we can teach you live on Zoom every day if you want to trade prop firms, beat the challenges easily, and then go ahead and make money out of the funds. See you in the next one.